Hello and welcome to this video. So in this video, I will show you one awesome technique to trade in a bullish market, to do option trading in a bullish market by giving just 5 minutes per day, right? So without wasting any time, let's go further into the video. And yeah, I forgot to tell you, if you have not subscribed to the channel so far, please subscribe it and spread the word in your friends and your family.
Hi, I'm Harshit Mohan. I am a stock market investor and trader by passion. I am father of a lovely daughter, husband of a loving wife, and I'm also the founder of Peaceful Wealth Community.
So let us see what is that technique which is extremely good in a bullish market, and it can give you in the range of 30 to 40% returns annually or more by giving just 5 minutes. So again, the index which I am choosing, the instrument which I am choosing is Bank Nifty, right? And this is going to be Bank Nifty weekly chart. All right. And one strategy I've already shared on the Aaron Condor. The link is given below. And in that Aaron Condor, I gave you a technique where you can do where you can make consistent income by trading option by executing this Aaron Condor strategy in a sideways market. And this strategy is bull put spread for a bull market. Okay, so and sooner I will be shooting a video also on bear put spread, where you can execute this strategy on a bearish market, right? So once you have all these three strategies in place, for a sideways, for a bullish, and for a bearish phase, you will have all the weapons in your arsenal to tackle any kind of market situation, and only then you can become a consistent trader in the market, right? So let us first of all discuss what is a bull put spread and how you will execute it. And I am already assuming that you are having some experience in the options, and I'm not going to go detail into the options and all that, because that will be a too long a video. If you want more hand holding and support, then the link is given below to my free program where I provide more support. So let us first of all discuss what is this bull put spread and how you can execute it. So this bull put spread basically is a technique which you will use for a bull market. And here what we are going to do, we are simply going to sell a 15 delta and buy 10 delta, right? So let me first of all give you the rules of this trading strategy, bull put spread. So first of all, we will go and check the Bank Nifty weekly chart. So this is Bank Nifty weekly chart. In Aaron Condor, we were looking for the RSI between 40 and 60, and here we will look for the RSI above 60. Okay, so the RSI settings is length 7 and the boundary 60/40. Once you have this, after that you simply change the chart, the time frame, to weekly in Bank Nifty, and look at what is the RSI value for the week in which you are going to initiate the trades. And in that week, the RSI has to be more than 60. Only then we will execute this bull put, otherwise we will not execute bull put. So that is number one. Number two, you have to sell 15 delta and you have to buy 10 delta. And when you are supposed to do that? On Thursdays, on expiries. Thursday 3:15 p.m. Thursday 3:15 p.m. for the next week you have to open the trades, right? So that is rule number 3. Rule number 4, when you will exit. You will exit when your profit is either 1000 rupees or your loss is 1000 rupees. And if not both the situations, your uh, trading has come to the expiry day, and on the expiry day you will close it at 1:30 p.m. So these are the three conditions: when the loss is 1000 rupees, when the profit is 1000 rupees, or if nothing has happened in that week and you have come to the expiry day. So then on the expiry day at 1:30 p.m, whatever is the position profit loss, you will simply close it. That's all. So these are the three conditions, and yes, you will do adjustments, and adjustments have to be done every day at 3:15 p.m only. Okay, so let us show it with a simulation. Okay, then only you will understand it better. So this is Bank Nifty and this is the weekly chart of Bank Nifty, and let us see a situation when it was more than 60. So you see it is more than 60 here. Okay, in this particular week, this is week of 30th August 21, right? 30th August 21. Let's see here. So this is option simulator in Opstra. 30th August. Okay, so this week, which means September. So we will initiate the trade on 2nd September for 9th September expiry. So this payoff date I will select as 9th, and the start date will be 2nd. And here also I am going to select 9th September. Right. So now we are going to do the 3:15 p.m. So on 2nd September we will go to 3:15 p.m. Open the option chain. Okay, and just remember 15 delta we are going to sell and 10 delta we are going to buy, and we will keep doing this every day. So on this 2nd September 3:15 we will execute this. So this 20 delta we are going to sell, and this is on the put side. Yeah, so 20 delta, 15 delta we have to sell on the, we have to do these things on the put side. This one 17, oh, this is Nifty, sorry, we have to do this in Bank Nifty. Okay, 9th expiry, 2nd September. Again, we'll come to the 3:15. Sorry. Yeah, so 2nd September 3:15, option chain. And now 15 delta we are going to sell, and 10 delta we are going to buy. If it is not close to 10 and 15, if it is not exactly 10 and 15, just take strikes which are closer to 10 and 15, as close as possible. Once you do this, you will see a chart like this. Now don't look at all these sections, they keep varying every day. And now let us start our simulation. So on 2nd September 3:15 we entered the trade. Let's go forward one day. On 3rd September, what is the status? We have a profit and loss of 5 rupees. Okay, so what we are going to do? We are going to simply do the adjustments. Remember, we will close the trade when our profit is 1000, or when the loss is 1000, or it is an expiry day and it is 1:30 p.m. In only these three conditions we will close the trade, otherwise we will simply do the adjustments. So let me close these existing trades because it does not meet any of these three conditions. So I'm closing these trades with the exit price, right, and initiating new trades. So 15 delta sell and 10 delta buy. All right, let's go forward one day. We have profit of 47.5 rupees. Okay, we are again going to do the adjustments. And why it is 1000 rupees? So let me tell you, 1000 rupees is selected because it is 4% of 25,000, and 25,000 is the margin required to execute this trade. So if you get 4% profit in a week, do you think it is a bad? Absolutely not, right? 4% you get returns in a week, in a year in a savings bank account, even less than that, 3.5 or 3%. Here you are getting 4% in 1 week. And in my experience, in my analysis, if you get 4% returns, simply close the trade and enjoy the profit. And same way, if you have a loss of 4%, simply close the trade and don't initiate any new position for that week. And we'll wait for the next week to start a new position. All right. Okay, so we have closed these trades. Now we are going to initiate new positions on the 6th of September. So again, we will sell 20 delta. As I told you, if it is, oh sorry, 15 and 10 delta, this one is wrong. Okay, so we'll sell the 15 delta and buy 10 delta. If it is not exactly 10-15, as I told you, it should be as close as possible. Now let's go forward one day. This is 7th September and we have a profit of 75 rupees. Alright. So it is moving very slowly, but no problem. We'll simply follow the rules. And when you follow the rules, you make profit. If you break the rules, you start losing. As simple as that. Again, we will initiate new positions. This 15 delta sell and this 10 delta buy. Right. Let's go forward one day. Now this is one day before the expiry. Okay. And what is the profit now? For 13.75, which is almost 2%, right? It's almost 2% returns. We will simply do the adjustment because it has not met our criteria of 1000 rupees of profit or 1000 rupees of loss, or it's an expiry day and it's 1:30 p.m. So we will create new positions again. See, right now it is for 13.75 of profit. Yeah, 15 delta sell and 10 delta buy. Okay. And now it is expiry day, and in expiry day we will close our positions at 1:30 p.m. So let's go back in time. This is 1:30 on expiry day and let us see what is the result. So we have a profit of 686.25 rupees, right? 686.25. Now this is approximately 3% returns. This is approximately 3% returns, which is good, which is very good. Okay. So we have seen that it performs very well in a bull market. Let's do one more simulation. So just now we did this for 30th August. Okay, let's do it for 6th of September. Because in the 6th of September week also the Bank Nifty RSI was more than 60. Alright. So 6th of September means in this week. So on 9th we will initiate the trade for 16th September expiry. So we'll select this payoff date as 16th September and we will initiate the trade on 9th September. At what time? At 3:15 p.m. So previous positions you will close at 1:30 p.m. and then you will initiate new positions at 3:15 p.m. This is what happens on an expiry day if you follow these strategies. And let us select the expiry. So this is 16th September and let's go forward in time. We will be initiating this trade at 3:15 p.m. Right, so this is 3:15 on 9th September and okay, let's reset this on 9th September and let's do this 15 and 10 delta. 15 delta sell, 10 delta buy. Alright, looks like this. Okay, let's go forward one day. So this is 13th September at 3:15. We will do adjustments only at 3:15. Okay, we will not do adjustment at any other time. So on 13th September at 3:15, I see there is a loss of minus 112 rupees. And it is not yet 1000 rupees of loss. So we will simply do the adjustment and do nothing else. So 64.1 is the exit. I will initiate new position. Okay, let's go forward one day. 14th, we have a profit of 256 rupees. Okay, so we had a loss one day, but next day it recovered all the losses and we are in profit. But again, profit is not 1000 rupees, so we will not close this. We will simply do the adjustments. We will close it if the profit is 1000 rupees, the loss is 1000 rupees, or it's expiry day and it's 1:30 p.m. Let's do the adjustments. Let's initiate new positions now. 15 delta sell and 10 delta buy. All right, next day. Now this is one day before the expiry and we have a profit of 653 rupees. But again, it has not come to our target, so we will simply do the adjustment. It's all rule based. No application of brain is required. This can be done even by a kid in a school. And okay, sorry, I forgot to initiate new positions. So we have closed these positions on this day and let's initiate new positions with the same 15 and 10 delta. This 15 delta sell and this is 10 delta buy. Right? And now it is expiry day. On expiry day, we are supposed to close at 1:30. Whatever is the profit or loss at 1:30, we will simply humbly accept it. And we see we have a profit of 891.25 rupees, almost 4%. Our target was 1000 rupees, but it's okay. Even if we are getting 900 by on a capital of 25,000 rupees in 1 week, it is extremely good returns, extremely good returns, right? So this is how you will do the adjustment in this bull put spread when the market is rising, right? And I've given you the technique. Please execute it yourself and generate amazing returns. Right now, one assumption in this video has been that you are already an option trader and you are familiar with these terms. If you are not familiar with these terms and you need more support, then I advise you to join my free 5-day challenge training program, which is given in the description box. The link is given there, and there you will get more support and more help when it comes to executing different strategies in the market and helping and help understand the market better, right? And if you're not subscribed to the channel so far, please click the subscribe button and stay tuned with the updates. And that's all in this video. I hope now you will make a lot of money using this technique. And one video I've already shot on the iron condor, and there will be one more video on the uh, bear call spread, which is used for the bearish market. So the links for all these techniques will be given in this video itself. And when you finish all these three videos related to these techniques for the three different market situations, you will become a consistent trader for sure. So thanks again for watching. Wish you a very, very happy future and a wealthy future.